We're very long, and we've started to rotate more into sort of traditional cyclicals and things that nobody likes, like the Chinese banking system and certain other financial related stocks that have been really beaten up, not just this year, actually, longer term, but now I think are due for a renaissance of some sort. It doesn't have to be very much to get some good gains from here.
You've had a number of contrarian plays in the past. Are you still following that strategy?
We are inherently contrarian. There's no point doing what everybody else does, because if you feel that way, you might as well just buy the index and do passive investing, because you're going to be moving with the crowd. And of course, that doesn't always turn out too badly. But if you want to outperform, you've got to do something different. There's no point buying the same stocks as everybody else. So if you go to those Chinese banks you had up a moment ago, what's kind of interesting is that whatever you think about the quality of Chinese loan books, and there's lots of mixed opinions on that, you can buy a collection of companies which are too big to fail, trading at 40% of hard net assets on PE ratios of 4 to 5 and yielding 7+%. I mean, you can't find that kind of package in many places in the world these days.
Apart from the Chinese banks, what else then are you looking at?
Well, another thing that everybody hates at the moment is Chinese property stocks. And they hate them because of the 3 red lines policy, which is coming out from a series of meetings with the Ministry of Housing and the bank, central bank, People's Bank of China, to restrict leverage in the real estate industry. But actually, for most players, it doesn't mean much. Yeah, Evergrande, Sunac, RNF, 1 or 2 companies like that, Greenland, they've got themselves way over leveraged and they need to step back. But this is a preemptive strike by the Chinese authorities, and we're not just talking about trying to avoid what happened in the US in 2007-8. They're trying to avoid what happened in Korea and Japan, and particularly Japan in the 1980s. So yeah, this sector is under pressure at the moment because people see it as now lower growth. But after all, you've been paying 7-8 times earnings for stocks that have been compounding at 15 to 20%. Now you can buy them at 4 to 5 to 6 times earnings, and in future they'll probably be compounding at 10 to 15. So again, a very interesting place to look for value and growth indeed.
You say that the US-China relationship is the biggest issue at the moment. Are you expecting a thawing under a Biden presidency?
Not really. I think a change of tactics and a change of hopefully atmosphere. And that, of course, that could work for or against the relationship, in the sense that Trump was extremely unpredictable and erratic. But in fact, from China's point of view, he wasn't a particularly bad person to have sitting in the White House, because he alienated all America's friends. And Biden, of course, has a long history of building consensus, working with coalitions across the aisle in the US. And I think that will be a feature of his presidency. And I imagine that his approach to China will be less directly confrontational, but more collegial with Europe and other countries, and perhaps more effective in achieving things that Trump's adversarial approach has failed to accomplish.
Finally, what about the virus? We continue to see record daily case numbers. What are you doing on that front? Obviously watching it like everyone else is.
Yeah, but it depends where you are, doesn't it? You have record daily case numbers in the US and Europe, but not here. We haven't had a case domestically in Singapore for quite a while. And in Taiwan, they haven't had one for over 200 days. And there's not much in China either. So I think it's horses for courses there, isn't it?